Hey guys, and welcome to a quick tutorial on how to get into buying options extremely fast with little experience. So there's a lot of hype going on around the short squeezes right now, and I see a lot of people wondering how they can buy options to really leverage their money and take advantage of this short-term opportunity. So right now, a lot of chatter is going on about what happened with GameStop, and there's some others that are following suit. You have BlackBerry, AMC, Nokia, Space. What else is there? Bed Bath and Beyond, that's a big one. Anyways, you can get on these gravy trains. You can buy the shares and just ride it up and sell it whenever you think it's going to go down, or you can buy options and really leverage your money and make a ton of money if it keeps going up. So how you do that? If you're not approved for options, go ahead and get the Robinhood app. I'll put a link down below that'll give you free stock. The reason for this is because you're able to get money in extremely fast and you're able to be approved for options immediately, which you can't do with other accounts. I have Ameritrade, Schwab, Interactive Broker. You can't get approved for options that quick with them. So here you are. You're in Robinhood. You've already gone through the basics of setting up your account. Just tell it you're an expert at everything. You make a ton of money, and they will just approve you for options. So let's go into it. So let's look at what's going on with, let's say, AMC right now, because there's a lot of talk going on with AMC. It went up 322% pre-market. So this stock is just flying. And what's interesting about it is the market cap is really low, so it doesn't take a whole lot of money to move it. And the whole world is all about short squeezes. It's being shorted. So literally, this is a worldwide pump and dump that's about to occur. So you want to get in on it, and you want to make as much money as possible, so you go to trade an option. So if we click here where it says trade, you'll see two options, trade options or just buy it. You can just buy it, and then if it goes up $1, you make $1 per share you own. Or you can buy options. When you trade an option, you make a lot more if it goes up a little bit, because it's like leveraging your money almost 100-fold. So if it goes up, $1, you make $100. Theoretically, it's not quite like that, but let's just keep it basic for this video, and just know that your money is extremely leveraged. If the stock goes up when you buy a call, you make a ton of money. If the stock goes sideways or it goes down, you actually lose money, although your maximum loss is limited to the price of the call. So essentially a bet. It's like a lottery ticket. However much money you want to spend, you either lose it or you make a shitload of money. So let's look at our options over here. So you notice at the top we have dates: January 29th, February 5th, February 12th, February 9th, February 26th. The further out in time you go, the more expensive the options are. The reason for that is because the stock has more time to get to this price. So you have these numbers here. You have $10 call, $9 call, $8 call, so on and so forth. That's called the strike price. That's the price that you want the stock to go over. If it goes over that, you essentially are what's called in the money. And your option can be exercised to purchase 100 contracts. Now let's pop this right out right now. Do not hold your option all the way to expiration unless you want to own 100 shares of that stock. So for example, AMC, and you only have a certain amount of money, you probably don't want to own 100 shares of it for each option call you buy. You probably want to sell the option before expiration. It expires Friday on the date. Whatever date this is listed, that's the date of expiration. It expires at the end of market day, Central Time, that's 3 p.m., Eastern, that's 4 p.m. So make sure you close your position before that time unless you plan on owning the shares if you're in the money. So here we have let's break down exactly what's going on. So for this particular stock and all these little short squeezes that are about to occur over the next couple days, you want to do the short-term option. So January 29th, that's this Friday, in my case, 3 p.m. These all expire, meaning you either buy the stock or you need to close it. So let's look at them and see what's going on here. Let's look at the $9 call. It says $9 call, and on the right here it says 19 cents. And you notice where it says 0% up today, but our stock is up like 350%. The reason for that is because options don't open until market time. So at 8:30 a.m. Central Time, this will shoot up, probably quadruple, because the stock quadrupled the price of the option. Now what you'll also find is there'll be more options available because the stock went up so much. The market makers are going to open up more options above this for probably all the way up to like $50. I wouldn't be surprised if not higher. So you can buy other ones. Notice the lower the price of the strike, the lower the call number over here on the left, the more expensive the actual option costs. The reason for that is because it's more likely to expire in the money, and less likely to expire worthless. So it's the higher up you go, the higher the risk, but the higher the return, because you can obviously buy more of them if they're cheap. A 19-cent option, you can buy a lot more than you could a 54-cent option. Now, this price actually just removed the decimal point. The actual cost of options is 100 times the price listed. The reason for that is because you're buying 100 of them. You're buying the right to 100 shares of stock. So 19-cent $9 call option is actually $19. That's the literal cost of it. So let's say you click on it, and how many shares you want to buy is however much money you want to spend. It tells you here, luckily, it's going to tell you exactly how much it is. So let's say I want to buy 50 contracts at $19 per contract. It's going to cost me $950. If I hit review and go through with it, I will buy the option. Now, whenever you buy the option, make sure you watch it because it goes up in price just like a stock does. And like I said before, I would recommend closing it before the end of day on the Friday that expires. Just trade it. You're essentially trading the option to someone else. And when you do that, you should be making bukus of money, assuming the stock goes up. I hope you enjoyed this video, and good luck this week.